Good morning. Thank you guys for coming in here actually, and if you're watching at home, try joining us. A lot of fun. Okay, so it is the 14th. We have a bunch of tickers, so pull up a chair, got a snack. It's going to be a long one. And some of you are submitting way too many tickers. It's not that I don't mind doing the work. It's just nobody should have enough tickers on a watch list to be able to ask questions about 30 of them in one sitting. That's just not productive. Okay, let's get started. Alphabetically broken into 3 different videos, about 52 to 54 tickers each. A few tickers got cut out, but that's okay. So the initial list was about 190. And let's go. Apple. First things first, the whole market has never been higher. This is an easy statement to say. So anybody looking to go long all in, I would say no to that, bad idea. Anybody looking to add to current risk, I push back and saying, what did you learn new that causes you to add? What's the fear? You're not long enough at all-time highs. This is a rhetorical question. If you're looking to initiate a position, I don't mind that as long as you leave enough dry powder to add if the stock gets cut in half. If you don't think stocks get cut in half, I think Amazon every year loses 30%. Some weird stat like this. So yeah, they do get cut in half. Leave some money on the side to manage the position. The markets are fighting with making an all-time high or not. If you've been watching my strategy videos, it's all about watching the small caps. The SPX, for example, is about to break out like an inch away, and it's not going to happen if the IWM cannot come out of the base that it's in. So that's why I insist watching the IWM. Thank you, Echo. I appreciate it. Yes, we did talk about all-time highs months ago, and it sounded crazy, but here we are. We're not crazy. Okay, so the big picture is stocks are very high. The feeling that, oh, I'm missing out should go away because it's not real. Okay, so this is Apple. Here's the objective part on Apple. It has sellers above, hardcore sellers at 192, and it has a must-hold level at 179. A little bit higher, but let's go with round numbers, 179. If you lose the 179, you can end up at 171. And the earnings are coming up soon. I think the ones that usually kicks off is Netflix and then Tesla. And whatever happens to Netflix, about the same happens to all the gang, the big large cap tech. And then Tesla, of course. So watch out. You have sellers above, and if you want immediate resistance, 190, it's actually plus or minus $1. 192, every level above is a resistance. And it looks like it's easier to come down to 170 and 172 than it is to break into all-time highs. If we zoom out, it's behaving like it's basing to breakout. Let's see if it can. It has the power. This is the best company on the planet. ABBV. Short term, bulls in charge. If I zoom out to see if I can get long term. Looks like a breakout off of 155. The target of that breakout could be higher, but here, going into 4 prior fail. This is the 5th attempt at breaking out from 166. I would side with the bears. I think it's easier to get to 156 than it is to 170. So if I take a position on it, it'll be bearish. And the bearish outlook, clearly, if you can prove to me you can close above that level, the prior fails, then I would change my mind. Until then, I would side with the bears from here. Airbnb, similar situation as Apple. You can see that there are heavy sellers above. That one candle from December 20th is huge. A lot of sellers there. In fact, you can put a box around the top of it, top half of it, and consider that there are sellers there. And there are a lot of buyers at 130-ish inside this candle. Okay, there we go. We have a battle. We have a seller inside this box. Whoops. All right, getting lazy, copy and paste. And I would say you have a buyer halfway through that large candle. through the bottom. And technically, if you lose 130, you should target 118, but it's not going to be easy because there's a lot of buyers down there. So it's a stuck. It probably needs a headline to do either or. I think it's easy to come down to 135. If I were to go swing trading long, I would wait for a dip a little bit further, try longs against 132, maybe again a curl up to 140. I don't think it's going to be easy to break out, although it is available. Sellers are scattered above. ADM, okay, sellers are not in control. This should be 30 minutes. Sellers, I'm sorry, are in control, and they look like they're about to take more control. So ADM needs a bounce. Let me say it nicely. If it doesn't get to 72 or 73 and hold, it will probably get to 62. Let me look left. 65 has a lot of support. Bounce, failing. So if they don't bounce out of this area, if they don't do this, they're likely to do this. Retest. And get closer to get clues. 71, 70.8 actually. Sellers. Okay. ADSK. If I'm looking to get long, I wouldn't. This is a prior fail. It looks like a giant cup and handle that would take it to, I don't know, 310. But onus is on the bulls to prove that they can this time break through it. Now here's the interesting part. They did break out from 225. And they came down and bounced off of it. So they confirmed footing below. So they can do it. But I think 248 is not the same as 225 as far as breakout. Look at how pivotal that is. A lot of sellers inside that zone. So I think the upside is limited in this environment based on this stock chart. Okay. AEHR. It fell apart on earnings reaction. The earnings report was fine. Their forecast was timid. It was just saying, we did great. We're going to do just as well next time and not much better. And the reaction was negative. If I'm not long, I'd be tempted. But by no means is this a bottom. Technically, it has a lot more to go if they want to. They just lost a massive head and shoulders. Mathematically, this will put it at minus. 31 points below here, it'll be minus, which is not correct, right? But it just says, uh-oh, we just lost footing, and we better be able to hold. You have one bounce from January of last year. If you lose that, you might come down to the low teens. If I'm an investor and I know the company, this would be a good time to start. I would not do more than 30% so I can double down and then add some more if I need to. Where would I double down? Not here. If I just started, I wouldn't double down until I'm down 25%. That's me. That's my style. So how to get long? I could sell a put to the end of the year way below current price and I'll break even at 10. That would be one way. It's doable. So I will sell a put to own shares and somebody will say, all right, I'll give you my shares at 10. Here's my money. That's one way to do it. A firm, not interested myself. We might have a crisis in credit. Which segment? I have no idea. All I know is a bunch of people have overcommitted themselves, especially in cars. Car payments, I was speaking to normal friends at the gym yesterday, and a couple of them are stuck in their car payments. Their car is eating about $1,000 a month, and their hourlies, they shouldn't be paying $1,000 a month because it's a huge chunk of their overhead. So now they're car poor. They used to say house poor. Now people are car poor. So I don't know what's going on in credit. Something's got to give. This is a head and shoulders. If it loses 41, it's probably going to 34. So if I'm looking to go long, it's a tactical long. Otherwise, I'm patient. It looks harder to get out of 47 than it is to come down below. So I'm patient on that side. AI, I don't believe in the company like I did Palantir, for example. This P&L is not attractive at all. Bottom right-hand corner of my screen. The blue is sales. The teal are the net. So they shouldn't be like this. So Palantir's blue, the sales were like a ramp. And yes, they did lose money, but at least sales were accelerating. These guys look like they're dressing the company up for sale. That's which is not a bad thing, but technically all on its own, it wouldn't be for me. Good support scattered through 23, if that helps you trade. ALB, starting to look interesting. In fact, I'm going to add it to, oh, it's on. Nope, it's not. Okay, I thought it was a buy here, but I didn't go for it. Maybe next time I will. So it's falling into a prior base. It should find support as long as it doesn't lose 112. If it loses 112, dive, exit, because it's probably going much lower. So it does need help from the market. I wouldn't go all in, even when it dips. AMD, not for me up here. Somebody, I think, asked me, how do you short AMD? You just sell a call spread and buy a put, either or both, or buy a put spread, put diagonal, put calendar. I think it's headed to 140 if it doesn't break out soon. Same as the market. AMGN. This is not an obvious entry for anybody here. Hard sellers, hard buyers. If for whatever reason it hiccups at 300, it probably ends up at 288. You're an investor. Are you what? Make sure you know what time frame you're trading. Just broke out into all-time high. This is not an obvious entry for me. Amazon is making higher lows and higher highs, and just triggered a huge head and shoulders. In case you don't see it, the upside potential of that head and shoulders is way up there. This is what the S&P is looking at. So it's an S&P story, Amazon. If the markets break out into their potential, Amazon will probably make an all-time high based on its own breakout. And look, it already confirmed the breakout. They broke out, came down below the neckline, came out, and just ready to go. All they need is the market. So the next earnings season is really important to Amazon, and Amazon is really important to the world. It basically shows retail sales in the US, and I think it's pretty healthy. Arista, I don't know why you're asking. What are you asking me? What do you need from me on this one from the chart? Are you asking to go long? You take your own money into long. I would never go long a stock that just is into all-time high. If you're a momentum trader, okay, then come into the live room. We'll trade it. But as an investor, there's nothing to be said from the chart. You should do your homework and decide how much money you want to risk up here at all-time highs. What are you missing on? That would be the question. Arapaho? Is this who that is? Anyway, this one is the opposite of Amazon. Watch. If I flip the chart upside down, Amazon is breaking out. This one is breaking down. So if they don't hold 30, they're going much, much lower. Having said that, they did bounce in this zone last 2 to 3 times they came in. So if I'm not out of my longs, I would want to see what happens against these. So if I had a credit put spread, I wouldn't chicken out of it. But I'm going to tell you that if it bounces to 34, I'd be out of my longs. APPN needs to hold 33. Otherwise, it's going to be easy for it to get down to 30. Huge sellers at 36, you can see right there. So it's 36 versus 33. Whichever line gets breached, it will carry in that direction. Be careful, longs. This one can bounce to 6.4, and then the battle is there. If it curls back down and loses this level from this week, it ends up in the low 5s. ARM, You know my story with ARM. I went long at 55. I booked somewhere in the middle of this giant rally. I missed half of it, but that's okay. It is not for me here. Long-term investment, that's a good company. If you want to nibble, I understand. I think it's a better buy in the 50s. And if it ever comes back to 46 again, grab it with 2 hands. I missed my ad at 46 like I wanted to, but that's okay. I'm patient. I have not re-engaged. If you twist my arm, I would sell puts at the end of the year and just sleep on them if I don't need the margin. Like if I have a good size account where I can set aside a few $1,000s for this stock, I can sell puts and they lock that money against it, and I'll be long with room to give. Jacob, it's whenever it closes below and then it closes back above. Ask me in the live room. I'll show you 100 examples. AVGO, not for me at this point. This was the second stock of the year last year. NVIDIA was my stock of the year, and AVGO took the markets to its December rally off of an unbelievable explosion on earnings, and this is a massive stock. And it moved a few key indices that it is a heavyweight in, and it just took it to another level. So it's not for me up here. It's a great company. Look at this P&L. I mean, if you want to draw a fake looking P&L, this would be it. Look at it. There's no bone to pick with that thing. It just pick your entry points. Up here for me, the risk is the market on AVGO. American Express, I have 3 people that want to short it. I'm on board with that short idea. Just make sure to use the proper vehicle. Buying puts, buying a put spread of sorts, selling a call spread. Make sure you know when the earnings are for it or any of the companies that it trades like. I'm not sure it even trades like Visa and MasterCard. It's its own thing, but respect it. It's a pretty good company. Boeing, I am short. My short played out completely, but I'm also long now. Via sold puts at 165. I'm not doing anything. If it comes down to here, I'll sell more puts if the news doesn't change. Right now, they just suffered a blow on that door thing that flew off. And I don't know the facts, and I think the FFA is starting to look into it. The only problem for the stock is if they restrict sales. If they ground the plane and saying you cannot sell it until you prove to us that it's airworthy again. So if it's a maintenance thing or an education thing, that's one thing. But if it's a design flaw or software flaw, then they'll stop sales. That's what affects the P&L. So right now, it's affecting the faith in the stock, not the actual stock P&L. So let's see what happens. There's a gap into the 200s. Remember how hard it was rallying and how weird that was? They weren't taking a break. This stock, let's put some Fibonacci levels in here. It just entered the golden zone 5 days ago. The golden zone is 50% plus or minus those 3 lines that are dashed. Okay, I think it can come down to this credit put spread part. This is an old note. I should change that to say support. BAX sellers at 42. You can see that long stick and a shorter stick. So this is a breakout, Jacob. You were asking how do you confirm a breakout? Well, this was a neckline where they fought over it and then the bulls popped. Well, if they come back down to here and come back up to here and make a higher high, and that means they've taken this area and now it's support, and now they can go to the objective of that, which is about this. So now the battle is ongoing here. What happens in this circle for this guy? Shorter term, the bulls are in charge. They're buying dips. So as long as they don't lose 38, the bulls are in charge. BITO, I would not be long crypto. In my opinion, Bitcoin needs to drop to 38, 35 for a tradable bounce. And the bounce could take it to all-time highs, but I think it should. So many Main Street people are talking to me about BITO and Bitcoin that I think Bitcoin needs to take a rest, like a serious rest down to the 20s. Technically, I don't see it, but 38 I see, 35 tradable, and the bounce could take it to new all-time highs. I'm not on board anymore of BITO, and I'm only holding a core position in crypto because my win was huge that I shared with you. And I'm just waiting for a reload, and the reload is miles and miles and miles below here. The dip is tradable for traders. Not yet. Look at BITO, it has a gap. That shouldn't happen in this ticker. So I wouldn't be interested in BITO unless it becomes a teenager again. Up here, it's not for me yet. BMY, good base below. It might come down to 49. I would go long and an immediate stop, because if it loses 48, I don't know where it goes. 45. And it has a lot of sellers above. I don't think it's easy to break out of 53.50 without a headline of sorts, something that takes it technically. Oh, look at that. We have lines. You have 53.40 and first set of buyers at 49.50, second set of buyers at 48.30. Those numbers should help you out. BTU. Okay, so just hit target 2 on those red things. So the technical downside has been fulfilled. And if you want to assume that this is an ascending channel, look, they're buying dips inside that. Dip, bought, dip, bought, dip, bought, dip. Will they buy it? Okay, and if they will, then it would look like this from here to here. And if I move it, so is it going to look like this? And I tell you why, because if I zoom out, that's the objective of that. When they came to here, I said, maybe they dip to break out. Well, they got to that same level and they couldn't break out, and now they're dipping again. If they hold a higher low, they have that opportunity. Otherwise, it's just as easy to come down to here and do this. Try it again from here long. So it's a tactical trade for me. It is investable too for the long term. Not all in though. This one, not for me. It's going into a prior fail. It's running like a monster, but it's going into a prior fail. I don't do that. You either buy the dip. If you don't have the courage to get long here, you should not have the courage to get long here. You're chasing. This person is smart. This person is chasing. You can break out. You can make money, but it's just not right trading. The better thing is next time it falls, have the guts to chase into support, not chase into resistance. This person made money. This person is probably going to lose money. That goes long into that. That's my instinct. So the next dip into 77 or 75 or 73 are buyable versus to go long here. BX. Okay, so this stock just broke out from a prior fail, breakout. They're coming back to touch the failure zone, and they should have support inside this one candle. If they hold in here, they can come back up and see if they can challenge that. So if you wanted to buy it here and you didn't, and it broke out to here, Nick, you told me to wait. Look, I missed it. Okay, then miss it some more, because more often than not, they come back to test where they came out from. So if you were anxious and you bought it here, Nick told me to wait, and screw that, I'm going to go long. You should have waited. So now you either buy the dip in order to ride it, or you let it break out and you buy the dip into the breakout. Either way, you can make money. When you chase, you're not going to make money. So it's falling into support is what I'm saying. Not bulletproof support, but support. I wouldn't be long this, because if it loses support, I couldn't tell you how low it goes. Huge bounce, huge bounce. It needs a huge bounce, and the market's at all-time highs. I would short the pop. If it goes to 170 or 168, I would buy a put for this opportunity. What is this? Avis Budget. Having rented from them once, it's a show, to be honest with you, this company. I have no idea how they can make money. It's like they're the only gig in town. It's just they're the only gig in town. Who rallies on war? I missed it. Okay, so I would not be long this stock, and if I am, my finger's on the trigger. Caterpillar, not an obvious entry point, good company. So at the end of last year, I made a few comments like, the industrials are rallying like we have a global growth explosion, and we don't. Having said that, Caterpillar is in danger of, if the market's correct, Caterpillar can drop 10% in 3 days. It's just too strong for its own good. But they are buying dips. And this I brought from prior behavior, and I just put it here. So this hiccup could bring it to a new all-time high. I wouldn't short it on its own. If I take a short in Caterpillar, I'm assuming markets are out of favor. So if you twist my arm, I would favor doing a credit call spread, bear call spread on this one, and a debit put spread. A debit put spread will be $10 wide. Cracker Barrel lost the head and shoulders trigger. It's probably going down to 87. It does have one stopover point of support at 70.5. This one. And if it misses that, it'll be in the mid to high 60s. They are buying dips though, so you got to respect that part. CCI. If it doesn't go out of 117, it's probably easier to get to 107. Technically speaking. Crude oil, I wouldn't chase it. All the war headlines, it's like OPEC uses that stuff in order to manipulate its price. So OPEC countries need to make money they need to make X number of dollars in order to sustain their own countries and social programs. So they either make it on pure volume, and they don't care the price, or they make it on margin. So when they're losing market share to the US, they try to prop up the price in order to make up the volume they're losing by dollars. So that's my thesis. What am I saying? I wouldn't chase oil into 76. It is a breakout opportunity, but I think it's going to ping pong between what you see on the screen, 71 and 76 for a bit. But it is sensitive to headlines, so we'll see. This one is, I think if you come up to 10, it'll be sold off and you'll make a lower low. It probably is going to end up at 6.5 in a series of lower lows and lower highs. See, a lot of energy companies. Folks, you're hanging on to a theme. Don't be like that. That's my warning. Okay. Ask those, anyway. Ask the EV themes, ask the pot themes. Don't get hung up on themes. This is your box. If you lose the low end of the box, you're going to end up at 53. If you take out the upper end of the box, you end up at 63. Make sure to know when the earnings, 18 days until the earnings. CrowdStrike, this here is not an obvious entry point. What are you? Whoa. Okay. Hopefully you're not asking me to go long. Because if you do want to go buy a call, I'll sell you that call. There's no way I'm going long here. Look at it. Just ask these people, what happened the last time you went long? If your instinct is to short it, be careful. It's a good company, but it's definitely overpriced from the stock price action, not the valuation. It's a growth company. Do your own valuation studies. But from a momentum, this is just way too much, way too fast. It's up 75% in like a month. If people that are looking to go long now, I ask, where's the conviction? You have so much conviction to go long. Why didn't you have half as much conviction down here or down here when it was 90? It's 280. Oh my gosh. Yeah, good company though. Buy the next dip. Cisco. I don't change my drawing. That drawing is still available on the long-term basis. So they have to deal with this giant candle. I think there are sellers at 51 and 51.5. Good P&L, solid P&L, boring company, so it will follow the market. You can watch the video, Hadley. CTAS. Good trend. I think you have a huge seller now above. A lot of sellers at 600 and 612. I wouldn't go long. If you want to buy the dip into the base of 568, that would be better. So folks, if you're new, here's how things work. On Friday, I sent out everywhere a note saying, give me your tickers so I can do this on your tickers. So I got 180 tickers. If you come in here and ask for tickers that are not on the list, it screws me up. I have to prepare my day, alphabetically sort them, and putting up in a spreadsheet. So at the end of this video, at the end of today, I could entertain some tickers if I don't run out of time. So next time, Joe, if you want tickers, let me know ahead of time and I'll be more than happy. Amazon I already covered, so you can watch the video and get Amazon. I don't remember if FSLY is on there. If not, come into the live room. We'll deal with it during the week. This one, I would be a buyer maybe into, I would understand going long into 560 and 520 if it falls there. I wouldn't want to chase it up here. It's a good company. The P&L looks pretty stable. Just a matter of timing. DoorDash, I wouldn't touch it here. Very convenient company, so I wouldn't short it. Let me rephrase. If it's an investment, I would take just enough to get me engaged. If I'm already long, I wouldn't add. Because whatever this thing wants to do, it has to do it inside the market. Let's see what the market wants to do first. Deere, same comments as Caterpillar. I don't get this global growth, but Deere has a farming aspect to it. Maybe Cat too. So I like Deere from a fundamental basis. I liked it when it fell into support, and if you spoke to me about Deere, I said I would go long against the prior bounce, and I would do it again. So next time it falls to 370 or lower, it's interesting. In fact, I see a lot of credit put spreads here. Did we do one? Looks like we did one. That's a lot of them here. So we went long, it looks like. Yeah, I wouldn't buy calls. I wouldn't buy shares. I would trade the price action positively. I don't know what this is. Oh, the Agio. I know what this is. Okay. Lower lows, lower highs. I mean, what's happening with this company? Technically, if you're a long-term swing trader, I get it. Yep. You do have the opportunity to get back to 160, 156. 168 is the secondary target as long as they hold above 132, basically. So if you're patient and you own shares, I get it. If you want to own leap calls and sell puts, I get it. So from that perspective, I don't know if it's liquid enough for that stuff. The stock is very active and the P&L isn't, so it's one of those things where, like, why does it trade like Tesla when it's very stable? Speaking of stable, look at this. Just copy and paste, copy and paste. So from here to here, you can move this along and it'll look like this. So the next dip better hold here. This resistance should be support. Get long in the next dip halfway, hoping that this wouldn't happen and that they will curl back up and go up. That's your ticket out of here. Okay, you should have support inside that green box. In fact, a little bit higher, 215. Disney, it was a good deal down there. It's not for me up here. If Disney breaks out of 97, it can get to 108, 112. Again, don't trade the memes. Don't watch Instagram and trade Disney, because what you see in Instagram, millions are canceling. Those were the fake news on Instagram. No, they're not. If they were, you would see it in the sales here. So first hurdle is 93. Second hurdle is 95. Third hurdle is 96.5. All of these are hurdles, but triggers. Look, if you take out 93, you challenge 95. If you take out 95, I think you get to 99. So it's a buy the dip scenario for me. Credit put spread could work as long as the markets doesn't give up its momentum. This was one of our longs. It was a tough win. It was an immediate win, and then it fell, and then it was a tough win. But if you bought shares, like I thought it would be good to sell puts to own shares, or buy leaps or buy shares, you did well. So good P&L, weird company, but decent P&L. If they take out the recent fail at 39, they could probably get to 48. So it's worth being long. I wouldn't chase it here, and if I would, it would be on dips into 32, or at least half a position tops. Doximity is another one we went long, and it gave us problems, but it played out the way we thought it would in time. Right here, it's going into that red line, that zone around the red line. If you look left, that's heavy volume. So it's approaching a selling point. So from here, I think it's easier to fall than it is to rally. But it's a buy the dip opportunity because that's what they've been doing, buying dips. So I wouldn't be surprised to see it at 27.4. Good P&L though. Devon, I would be alert. I would be exit on rallies. I think this one is going to 30 or 28. So I would exit on rallies. If it rallies up to 46, 48, and I'm long, if it rallies into 45 and that fixes my problem, I would be out. P&L is okay. You should study the company if you're an investor. When I say out as a trader, I think a lot of sellers above and not much buyers here. The buyers are lower, which is a recipe for any pop could revert lower to come down to here. So far to give you a visual, any is going to be met with sellers. It might curl back down. It looks like there are no buyers here, and then it may end up down below. EA, that's not it. Okay, that's not it. EA, yeah. Didn't it have a buyout? If it is, why are we trading it? A lot of sellers above. This is not a long for me. If it dips to 130, I'll be more interested in it. Up here, it looks pretty high. It's not going to be, whoops. Okay, so now we need to reset ourselves. eBay. So I use eBay every once in a while. Only they are cheaper than Amazon if you find the same stuff on eBay. I think it's in danger of doing this. Same as Devon. A better entry point would be below 40. If you take out 44.2, you get a couple of bucks out of it. Wow, their bottom line got happy. It looks like something happened in the quarter, shifts in the quarter. Okay. So that's the trading comments on eBay. Sellers, look, this was my comment from before. Sellers. Yep, they showed up. See that? So I'll move it forward. This one is stuck in a range. You have buyers below and sellers above. There's nothing to do here if you're already long. What the heck is this? What is this? Okay. Thing that make you go, All right. Just keep that in mind. There we go. Those lines are still good. So from here, when I drew those lines, they broke out. And now they have the opportunity to establish them as a base. And the bulls have the upper hand on Enbridge. You have to be careful that there's a dip potential. This is still doable. Like this. And it would still be bullish chart because there's support down here. So if it dips, is to establish base. There are buyers here. So if I'm long, I can stay long. If I'm looking to get long, I'll get long on dips. So here, there's going to be buyers. Etsy is bullish with a stop from a trading perspective. You're falling into the base. Okay, and the credit put spread scenario, let's see here, this support. So if somebody is now starting to get long, I get it. If somebody's panicking out of longs, no. If somebody's looking to short right here, also no. EXAS, you have a base, but you're testing this support level, and if you fail at that support level, you're probably going to come down to like 62. So be careful. How about you say it this way? They're selling rallies, so respect the sellers for now. Inside of a lower low, lower high trend, this is a lot of support, so it should hold. But you have to respect the buyers, the sellers. Sorry, This is a good support zone down here. FedEx, they're trying to establish a base into 242. So whenever something falls on headlines and they show you a flash low and a flash high, those are limits. So now I know that there's a bunch of sellers up here, and some sellers here, and some sellers here. And these are, of course, sellers. And a bunch of buyers right here. Because when the you know what hit the fan, boom. So you have support where I drew, and you have better support here. So I would go long here against the flash low, and I would go long here against an established low. I don't know what this form factor, is that a food company? Ascending channel, they're buying dips, so you have support at 36 and extreme resistance at 42. That's how it is. But the bulls are in charge on this daily chart. FSLY, out of nowhere now it's back in style. I haven't heard anybody ask about it for probably a year, and now it's back in style. Be careful. The P&L, questionable. It is aggressively growing, but it's questionable. And 18.5 is a catalyst. If you can take out this prior fail at 18.5, you can challenge these prior fails. And if you can take out 20, you can get to 22. Better done on dips. It looks like it has solid support too. Earnings in about a month. Fortinet, not for me. It's going into a prior fail. And if it's a buyout thing, I would definitely not touch it. 66 is a prior fail. How fast are you? Buy the dip into 56. You'd have an easier time. All right, this is video 1 of 3, and we can